Welcome back, everybody, to another market review. It's been a bit of a tricky week in the markets. A lot of our analysis didn't play out and didn't give us many executions on the potential moves that we thought would occur. This isn't necessarily a bad thing. It just means that we need to reevaluate the charts, keep a clear head, and then come back again next week and probably change our bias on the majority of pairs we've been trading. So with Aussie this week, we were thinking that a double bottom was in place with an upside target of 0.7400 likely to be met. However, off the back of this week's price action, we're seeing that the price is going to be closing as a very strong bearish engulfing candle. This is leading me to believe that we may be breaking lower from this level. Thus, we can draw in the bearish fib. And we can see that we have rejected out that fib reversal zone. We can also put in a counter trend line, and we can see that that has been broken too, as well as the moving average crossover. But for right now, for me, this pair is a bit in no man's land. I would like to see that confirmed break below 0.7500 for any further downside. We can see that D1 extension does line up very nicely with a key level, which is always a decent sign. So next week, if we do see any sort of pullback, then it might interest us to start selling this pair down. But as I said, we'd still need that confirmed break below 0.70500 for us to be short bias for the next few weeks to a couple of months. US dollar CAD as well. We have on this higher time frame, the weekly. We can see we had a very, very strong reaction of 1.3100, the key level. Also, this lower end of the channel that we've drawn in here. It's a bit of a tricky one now for where the price is going to go next. The month of January's candle closed very, very strong to the downside, which has given me that confidence that we're actually going to roll over and break out of this structure and come lower. However, this week's candle is causing some doubt on that move, and I do expect us to see 1.3400 next. And similar to Aussie US dollar, we're going to have to wait and see whether a breakout occurs of 1.34, and if it does, that will take us higher. So again, going into next week, we could be looking for a buying opportunity if we get that pullback to the moving averages, and then our targets can be 1.34, where we find a break or bounce scenario there. Earlier on in this week, we did speak about a couple of potential areas where we could potentially sell from. The first was simply drawn here just by looking at the structure to the left. We got some reaction there, but again, the price just ended up breaking through and actually rallied 100, 150 pips over a day. We then also highlighted this potential region in our fib reversal zone for shorts, but again, no real rejection or reaction, just a breakthrough, a breakout, and this does look set to be continue to go higher. But as I said, on the daily time frame, if we wait for that pullback before looking to enter next week, pullback to sort of 13250, that will give us a good opportunity to go long. Now, pound pairs have been moving quite well. Pound Aussie has been moving quite well this week. Pound JPY, we're going to go over in a sec, hasn't really been. But the longer term play on this pound Aussie looks to be playing out quite nicely. So we had the fourth bounce of this ascending trend line, which matched up nicely with the fib. So what we do is just we simply draw a fib from the most recent swing point, which in this case works out to be the fourth touch of this ascending trend line. We mapped it up to the high. The price came down in and rejected very, very heavily off that level. I think this was last Friday. Early on in the week this happened. So ever since that happened, we were kind of looking for opportunities to buy. But as I discussed with the group, the safest opportunity to trade this sort of setup is we need to confirm the Fibonacci retracement, which we had. We need to confirm the breakout, which is a break back above the moving averages. We also need those moving averages to cross over, which they did. And then the entry for me is always a break of this counter trend line. So that's what's happened. We broke above, came back retested, and currently sitting 53 pips of profit with our target set at 1.8500. The trade is risk-free, but this is just a good example of the classic entry that we look for in the Trade Hunt FX mentorship group. More of a swing position, that's 250 pips to the upside. This would have been an entry yesterday if you were brave over the news. But for me, again, as I say, I just wait for that extra confirmation, which is the break back above the counter trend line before going long. GBP JPY as well is showing something similar. We really are struggling to close back below this 14200 level. And we are just stuck in this range, really, between 1425 and 14200. So a 50 pip range. So a 4-hour break either side is going to trigger us into a position. I am still favouring a retest of this counter trend line here. Then again, similar to GBP AUD, we've had that fib rejection. If we can get a break back above the moving averages and this the crossover, we will see that momentum fly to the upside. And then it's all about the break up bounce from here. It's the third touch, so expect some volatility on this touch. And I'm still actually favouring the breakout to the upside, and I do want 145 to be hit at least. And then there's also the possibility of the D1 extension being met up there. So there is some quite nice longer term swing positions setting up within the pound pairs, and that's definitely something to keep an eye on next week. Apart from that, Euro JPY, let's have a quick look at. So Euro JPY did come down, and it is retesting this trend line. We rejected it yesterday. Today again, we're just sort of probably going to print an indecisive candle. So for me, Euro JPY, I haven't really got a bias on it at the moment. I would like to see a reaction from this counter trend line on the daily, which could lead us up higher, back up to 126 and 127. However, we did get that daily candle break below, then I would expect to see 124, and then of course a break of 124 would open up 122, and that would be a great leg to trade from. We actually got stopped out of a position on this trade last week. What I was looking for is this reaction here. So I had a fib on from there to the high. And we bought around this level here, looking to target 126 with a tight stop of only sort of 30 odd pips. Of course, unfortunately we did get stopped out of position, but that's why being a swing trader for me is the best way. You can, because our risk rewards are always very positive. We say that we like to keep the minimum 2 to 1. In this case, it's almost a 4 to 1. That means a 30 pip loss here, a 30 pip loss there. It's always going to be replaced by that big move to the upside when you do catch a swing move. It's just all about keeping your mindset strong and keeping your risk management tight. So when the trades do come back around and they start moving in your direction and you're making sort of 100, 200 pips, that's always going to replace the 30 pips you lose here and there. It's not every trade is going to be a winner. So you just have to play the game as it is and try and catch the pips when they're available to you. So we'll see what happens with Euro JPY. As I said, probably going to sit on my hands with this pair and wait and see what happens. But definitely for next week, US dollar CAD, pound Aussie, and pound JPY are on the watch list.